Good morning, and for some, good afternoon on the East Coast. Thanks for joining our webinar. We might wait just a minute or two to allow what is usually some later arrivals to join the webinar. I'm Chance Barnett, co-founder and CEO of Crowdfunder, and a pleasure to have you with us for our webinar of how to crowdfund your business. We have Jason Best and Woody Neese here on a webinar who will also be presenting. Unfortunately, our other presenter, Karen Kerrigan, had a health problem and she's not feeling well, so she is unable to join us, but we will be covering her previously scheduled material for the webinar. Jason and Woody were nice enough to cover that portion for us, so we wish Karen healthy recovery and that she feels much better soon. And we'll go ahead and get started. So Jason and Woody, would you guys take a moment and just introduce yourselves, give a little bit of background before we jump into things here?
Sure. Well, Chance, thanks so much for having us. This is Jason Best, and we're here with Woody Neese. We're two of the three entrepreneurs who created the startup exemption framework that ultimately became the framework used in the Jobs Act for Title III crowdfunding. We worked with Chance and a number of other people over about 18 months to really work on creating the groundswell opportunity and support throughout the White House and the House and the Senate to pass the bill. And now we're working with Crowdfunder and other organizations to work with the SEC and FINRA to make sure we get rules written that allow for the industry to perform in an effective manner, and also for companies to be able to crowdfund as soon as possible.
And we think this is Woody speaking. Thanks also to Chance for putting this event together. We think this is a really great opportunity for all of you because what we as a group and an organization and an industry bring to the table is a lot of experience, not just in the crowdfunding space, but as entrepreneurs as well, like many of you that are listening, that are trying to figure out how exactly do I crowdfund money for my business. So we are bringing practical experience from having raised money for companies. Jason and I both were part of Inc. 500 companies, so part of the 500 fastest growing private companies in the US. And we brought a lot of that knowledge and experience to bear when putting this model together for how we can create a legislation to get capital flowing to entrepreneurs. So we look forward to this webinar today.
Great. Thanks so much, Jason and Woody. A tiny bit about me. I'm a serial entrepreneur as well. I've had about 5 companies in the last 13 years, mostly here in the Southern California area. Turned investor and advisor for several years. And then it was really because of you guys, Jason and Woody, and the startup exemption framework that you put together that I really saw the market opportunity and the reality both for the legislative that I believe is and will be very transformative to both investors and small business entrepreneurs, but a great, fantastic market opportunity for businesses. So I'm really excited about the work you've done, the success in legislation, and now what's happening on the regulatory front. Let me spell out a little bit of context again, just as a reminder for what we're going to cover in the call. And then I'm going to first hand it over to Jason and Woody to start the presentation on the first bit. If you would, we're going to take questions towards the end of this presentation. So do us a favor, if you have a great question, something comes up that you're not sure about, you think is important, write it down. And as we get to the end, we're going to do a Q&A session where we're going to take your questions over the webinar. So in the chat here, there's the ability for you to ask a question. Please do so at the end, and we'll try to get to a few of those questions. So what we're covering today is a focus on everything you need to know about the current state of crowdfunding, which includes both the legislative and regulatory state of things, and then what are the implications of that. So Jason, where are you going to cover that? Karen Kerrigan, who unfortunately can't be with us, was going to then cover some of the core essentials and basics that you need to have in place as a business owner prior to even crowdfunding, and then what are the essentials that you need going into a crowdfunding environment in order to be successful. And then Jason and Woody are also going to cover that today as well on behalf of Karen. And then I'm going to follow up at the end and share some tips and specific secrets for success on how to have a successful crowdfunding round, what the two models of crowdfunding are, and how to know what's right for you, and then how things work on Crowdfunder if you're interested in doing a fundraise on our platform. So without further ado, I'd like to hand it over to Woody and Jason and allow them to go ahead and take us off on the SEC rulings timelines, when this market will kick off for actual investment, and what are the implications for small business owners. So Woody and Jason, please.
All right. Well, thanks to everyone again. We like to keep this high level. I think the best we can get out of this is when we get to the Q&A part as well. So please, when you do have questions, if we don't go into detail, feel free to ask those questions so that we can cover them later on. I think you'll all see that there's a lot of value to be delivered later on in the event. But a lot of people are confused with the fact that the president signed into law a bill on April 5th, 2012, legalizing crowdfunding, yet we don't have it existing today. The reason for that is because when you pass a securities law, you have to create rules around which the law will operate. And those rules are governed by the Securities and Exchange Commission. So the legislation gave the SEC 270 days to come up with rules related to how this legislation will function in the marketplace. And that's where we are right now, and that's why we're working very closely with the SEC and FINRA. There are, in terms of when we are going to go live, we're optimistic that the SEC will meet its goals. If not, it's very likely that they'll ask for a 90-day extension to the deadline, so that with that, you have to go through a public commenting period. So they do proposed rules that will come out first, and those proposed rules will then allow people to take a look at the rules and read them and review them and give their feedback to the SEC. That's about a 90-day window, and then the SEC can take anywhere from 30 to 60 days longer to incorporate that feedback from the crowdsourcing in many ways, their opinions, and come out with their final rules. So realistically, if you're looking to crowdfund debt or equity for your business under Title III of the Jobs Act, you're looking at about Q3 for next year. Now, Jason's going to talk about Title II of the Jobs Act, which is a form of crowdfunding for accredited investors that will be live before then.
So, as part of the Jobs Act, there was one of the regulations that was most important that we changed was how people are able to solicit for investment. And so currently, under current law that was written in 1933 and 1934, you cannot generally solicit for investment in private companies. With the Jobs Act, that's one of the first things that will be changed. We anticipate that those rules for the proposed rules from the SEC will be coming out in the January timeframe. That will allow for public solicitation, meaning that you can, if you have a restaurant, you can put a sign on the front counter of your restaurant. You can notify your social media. You can sort of more generally advertise the fact that you are raising capital for your business. That will occur, but that is done through a what's called a 506 offering, which is an offering that's conducted through a registered broker-dealer, and one that also could be done on a crowdfunding platform in conjunction with a broker-dealer. And so we want to, those should be available sooner. There is not a restriction on the amount of money that you can raise through those offerings as there is with crowdfunding. And it is only open to investors who are currently accredited investors, meaning people who make more than $200,000 per year or have over $1 million of net worth, and that excludes the value of your home. And so the big change there is allowing the same people who can make private investments today to do it more publicly and openly. And then that will happen sooner, and then later, as Woody was suggesting, there'll be a ability for everyone to make crowdfund investments once Title III goes into law.
Now, if you are considering crowdfunding money and you do want to do it from unaccredited investors, like we were talking, you're going to have to wait until the rules are finalized and crowdfunding goes live probably in Q3. there's two types of platforms whereby you will be able to crowdfund money for your business. One is a funding portal, and the other one is a broker-dealer. The difference between the two is a funding portal is really going to be a listing service in many cases, like the Yellow Pages, where people will be able to just throw up pitches. They will not be curated. There will be no ranking, and people can come in and look at pitches. But those funding portals themselves cannot handle any escrow or transfer, which means that they will not be able to handle any of the cash related to the transaction or the transfer of the shares. They have to play a hands-off role in the entire process and essentially outsource those functions to make sure that in case a funding portal goes out of business, you don't have to worry about people's cash disappearing if a funding portal disappears. The broker-dealers, on the other hand, are traditional broker-dealers that exist in the marketplace today and allow people, or I should say businesses, to really go out and raise capital in the traditional format, which means that you can have people going out there and helping you put a better pitch together to look for investors for your deal and bring them to the funding page. So they're going to have much more flexibility in terms of getting capital for a business than a funding portal will. They'll also be able to handle that escrow and transfer agent responsibility that exists that they have the right to in a broker-dealer relationship. Now, when it comes to what you as a business can raise, you're going to be limited to $1 million per year that you can raise through crowdfund investing under Title III. Now, this is all or nothing financing, so you have to keep in mind that you have to hit 100% of your funding target or no money is going to be exchanged. So if you decide that you need to put a pitch together, you need to raise capital, $500,000 of capital for an expansion of a dry cleaner business, and you come in with commitments or pledges really at $490,000, your campaign will actually fail, and you will not get any money back. I mean, you will not get funded. All the money goes back to the investors. It's a critical component of the legislation itself. We believe it provides a form of investor protection, and it will really require that entrepreneurs think in terms of lean startup methodology and raise capital in tranches. So keep that in mind when you're trying to decide how much capital you need and look at your network for that type of capital. Investors as well are going to be restricted as to how much they can invest. Jason was talking earlier about accredited investors, those people that have a net worth over $1 million, a liquid net worth, or have made over $200,000 in the past 2 years. They essentially, under the current securities structure, can invest in anything they want, whatever amount they want, because according to the SEC, they've got a more risk-tolerant level, and they can afford to lose capital. Unaccredited investors have been protected under the security laws in a way that prohibited from investing in these type of opportunities, and that's what we've changed in terms of this legislation. However, we put certain safeguards in there as well to make sure that people are not essentially betting any more than they can afford to lose. And one of the things we like to point out to people is investing in startups and small businesses is a high-risk form of investing. Nobody should be telling people otherwise that there's a sure bet of success in investing in any startup business. So if you make essentially under $40,000 a year, you're only going to be able to invest up to $2,000. Between $40,000 and $100,000, up to 5% of your income or net worth, and over $100,000, 10% of your income or net worth up to $100,000. And I think we can swing on over to the next slide. Was there any other components of the framework that you want to talk on?
No, that was really helpful. Great.
So there's certainly a lot that you can do to get ready for crowdfunding now. One of the things that it's going to be important that we like to stress is that crowdfunding does not mean that it will instantly be easy to raise capital for your business. Raising capital, raising funds from investments, or even donations for that matter, is a challenging work. And that what we believe is this may not make it practically easier, but certainly it gives you another avenue to find investors in new places and to do it in new ways. And so certainly with that there come a lot of benefits, beyond just the funding, because crowdfunding is more than just capital. Just like when you receive money from angel investors, venture capitalists, there are additional benefits you receive. We believe the same things are true with crowdfunding. So, for example, starting at the top of the wheel, we have the opportunity for you really to be able to, you're engaging your customers and your community in very new ways. So that they're not just customers, they're not just neighbors, they're also investors. It provides you with a way to validate the product service that you're selling. So, for example, maybe you have a successful business today, and you're thinking, well, maybe I want to add a new product line, or I'd like to add a second location, or I'd like to expand in some way. It allows you to offer this out as an investment or as a contribution, and to see if you're able to fund your production run through a contribution campaign, or see if you can fund enough capital to add that second location through an investment campaign. So those are the great ways to validate whether there's a market or not, because ultimately that's what investors want to know: is there a market? Is there a customer? How am I going to get my money back on my investment? Also, really using the crowd to vet your idea. The ability for you to really say, I think this is a great concept, a great new widget, and then for you to be able to see, well, other people believe that as well. It's a critically important element that up until now has required entrepreneurs or investors to really sort of do a lot of expensive research and take a lot of time, and then ultimately risk a production run or risk starting the business to test those theories. This allows you to test those in a faster, much cheaper way, and hopefully give you a better chance for success. It also gives you the chance to do better forms of financing.
We're switching over to a headset really quickly, so hold on 1 second.
No problem. Yeah, we're experiencing a little bit.
So
of
really, just having this
audio
opportunity to
struggles.
have, access to additional investors, because if you're using crowdfunding, whether the contribution or an investment model, and then you're ready, you need the next set of capital. Maybe you need to raise more than $1 million, or you're looking for some additional strengths that a particular professional investor can offer. Now you have a track record. Now you not only have been a successful business owner or a successful entrepreneur, but you've also successfully raised capital, you've deployed that capital, and you have achieved the milestones you hope to achieve. Nothing breeds confidence in investors like a track record and basically just fulfilling your commitments. Also, and so now as you're looking at really how you can begin, your steps toward crowdfunding now, because there's absolutely 5 things you can begin to do now to really prepare for when crowdfunding, whether it's to accredited investors or to everyone, sooner rather than later. First, really this social media mindset is critically important. You can't crowdfund without a crowd, and you're going to need to bring your own crowd. And whether you're an entrepreneur or an active business owner today, if you do not have a very active and engaged social network today, that's step 1. You must do that. LinkedIn, Twitter, Facebook, Google+, Pinterest, all of those things, sort of figuring out which of those social networks are right for you, and then actively engaging your community. You're really building that social network and doing it in a very active and pragmatic way. There are a number of services out there that can provide you with information on how to do it. There are also organizations that for fees will help you to build your social network. 3, become a better communicator. And this is not just in your face-to-face interactions with people, but also online and also in writing, and being able to communicate through your direct actions, through if your employees, how they communicate with your customers and communities, and then through the communication that your organization, how it communicates out to the community as well. 4th, really engaging and educating your customers, so that these are people who know and love your services today, but helping them to understand how they can help you more, how they can engage in a deeper experience with your brand that helps you to grow that engagement, so they have the desire to explore becoming an investor, evaluate the opportunity fairly, and then if they want to make that investment.
Jason, could you also spend a moment and share a bit about what are some of the requirements and what are the business essentials, things like a business plan and disclosure that will be required for a crowdfund investing offering to accredited or in the future further down the road non-accredited as well?
Sure. I mean, obviously, you'll need a business plan, and because that doesn't change. You'll always need. Every investor expects a business plan. Expects to see what you hope to achieve with your business, why you're unique, the uses of the capital, and what their investment returns are expected to be with pro forma financials. So all of those things are going to be critically important. You also, over time, will need to if you are successful in your campaign business, there are legal requirements for you to file annual disclosures with the SEC on what you're doing with capital and the financial statements of your business. So there's a lot of transparency in this marketplace that's never existed before. Some of that may seem like that's a lot of disclosure. However, this is, we were sort of in a new world, and with social media and the social web, it's a highly disclosive marketplace. And so it's important that you practice transparency and accountability and a lot of communication. Also, from an accounting perspective, depending on the amount of money that you raise, there are different levels of accounting accountability, one might say. So raising up from $0 to $100,000, you as a CEO are required to sign a document that states that the financials are accurate to the best of your ability. From 100,000 to 500,000 in raise, that requires a CPA's review. Essentially, the SEC is determining exactly what that means. Some are suggesting that would mean that the CPA would review the document and then provide you with a signed letter that these financials, after their review, comport with generally accepted accounting principles. Now, raising between $500,000 and $1 million is going to require an audit. That's what the legislation calls for. Now, the SEC has broad abilities to interpret what an audit means. And so we will see what the proposed rules look like with regard to whether that's a full audit in the classic sense or whether they create a different version of an audit for the purposes of raising crowdfunds. And finally, just before I wrap up and hand this back, just thinking about community. One of the things that the crowdfunders really take a lot of time with and doing a great job on is really thinking about crowdfunding from a community lens, and how can we bring members of communities together. And we think of community in lots of different ways, whether that's communities of geography, communities of interest, communities of origin, or communities of diaspora, and how you bring those communities together to achieve common goals and support each other. And so certainly that's something that, as you think about how you are going to go out for your campaign, where you'll access that money, thinking about community in all of those different ways will be really important so you can achieve your success. So thanks a lot for the opportunity to participate, Chance.
My pleasure. Thank you, guys. Again, if you have questions about that, we're going to take a few questions at the end. Now we're going to go ahead and go into a section that really describes more on the ground how to execute your crowdfunded round. This will include the 2 general models for crowdfunding and how to determine which might be the best fit. The 3 keys to successful crowdfunding campaign, and then some insider tips and tricks and how to achieve that on Crowdfunder if you're interested. So let's dive right into this stuff. First, which crowdfund model is best for you? If you go to crowdfunder.com right now, you'll see on our homepage that we're crowdfunding for businesses. We're not focused on creative projects. We're not focused on helping an individual get funding for what might be a hobby or a personal task or a pursuit. We're really focused on how do we help businesses grow and bringing the capital to bear and showcasing their management team, showcasing the plan that they have, and helping create a long-term set of relationships that create value for that company. We're focused on 3 main areas: small businesses, which might be a local business down the street from you who might manufacture something or is a restaurant, for example. Social enterprises, which are for-profit companies that alongside their profit goals also have impact goals to create social good. That could be feeding the homeless. That could be helping employ people who were excluded from the workforce for some reason. And then finally, we also serve tech startups. So we have a variety of each of these companies on the platform already. We have about 2,000 people who have applied to fundraise with us at Crowdfunder. And we have nearly 13,000 crowdfund investors who are open to looking at offerings and are interested in engaging on the platform today. So that covers who we are. Now, the two funding models that we power for people are currently contribution, and in the future, investment crowdfunding, which Jason and Woody just shared quite a bit about. I'll start with talking about investment. Again, as they said, what we're doing is waiting on a set of regulations for the SEC to be finalized. In short, what this looks like is that if you are a user and you have a company on Crowdfunder now, you will be able to build that social capital and build that community that you want today in order to be ready and prepared and have a significant amount of followers and supporters alongside your business, and be prepared to then step in and do a raise immediately once these rulings are lifted to first accredited investors. So that's likely in Q1 of next year if you're setting up and interested to raise equity or debt in your company. This is generally a pretty clear decision if you're looking to scale a very significant round of money and you have very specific usage of those funds to scale and grow your business, then investment is a clear win. The trade-off there is either you're tying yourself to servicing debt or you're tying yourself to diluting a part of your company or selling off a portion of the equity and shares in your company for that investment from the crowd. So again, that's likely Q1 where accredited crowdfunding will go live. And if you're a user and you have your company on Crowdfunder now and you're building social capital, now is the time to be doing that, because only several months down the road will we be able to roll out accredited crowdfunding and to put you in front of accredited investors. Contribution is the other model that we've just recently launched, and we're excited about this. Who is this a fit for? Well, it's not a fit for everyone, but it's a great fit for some businesses. So for example, we have one company that came on that is a social enterprise, a for-profit company that's also doing good in the world. And they came on a Crowdfunder and they saw us as a great tool to engage our community because we already had quite a few thought leaders and investors who are impact-minded and were interested in funding. So one of our companies called This Shirt Helps that came on saw contribution as a great model, and they were able to raise within 56 hours the full amount of their first set of funding goals. So that was a big success for them. We're excited about that. That was one of our first contribution raises. And now we're further engaging our community of crowdfunders and other great entrepreneurs and businesses who see contribution as a fit. Again, this is not investment offerings. You're not offering debt or equity in your company. What you're offering is a set of rewards, the ability for people to potentially participate in some significant way with you or the cause of your business or the impact of your business. And for people to be a part of funding and participating in the growth of your product or service. So oftentimes this is a fit for slightly more consumer-oriented businesses or services that have something that people would want to potentially purchase and get in the near future. But it can also be great for things like membership or for participation in your business in a unique way where you're building a bond between you and future customers in a way that doesn't happen if you're just transacting business through a shopping cart checkout system. So if you're on Crowdfunder in the future, go ahead and check out some of the existing contribution raises. And one of the best ways to learn how to be successful, and I've done this experience in my life as an entrepreneur, is to not think that you have to recreate the wheel every time. So what I encourage you to do is learn from other people's successes. Go and check out a few of the contribution raises that have been funded or are having success fundraising, and take a look at what those campaigns are. Maybe even participate in that campaign to see what it looks like and how it feels and what the process is on Crowdfunder or on any crowdfunding platform that might be around that you're interested in. And be a part of that process so you really know on the ground what that looks like. what are the communications? What was the pitch that the company is putting in front of you? What is their offering to you? And how are people engaging and talking about that? And so that's the contribution model. We see this as a great feeder, as a great way to validate your company, and as a great way to grow that social capital in the social network, to then leverage that for a potential future investment round. So imagine that you raised, let's say, $15,000 to $25,000 for your business via contribution today, and that brought in, let's say, 200, 250 new contributors who are now customers of yours. That's a great set of validation for your business, and it speaks loudly to if and when you want to do an investment raise for a larger amount, you will have that as validation to point out and to say, hey, investors, not only am I talking about the fact that I believe in my product or service, but here's 250 people who have already pre-funded this and made me successful and it helped me raise capital. So it's a really great arrow to have in your quiver to say, here's validation and here's another point why I'm a credible bet in terms of investment. So we're really focused on contribution being both its own fundraising goal and a great validator for what you might do in the future for investment fundraising. So now I want to cover what are the keys to success in your actual campaign when you're raising one. So there's two, and now in crowdfund investing, three really important elements. I'll start with the pitch and plan. This is really the basics of who you are, what you're doing, and how you're going to accomplish it. So if you look on Crowdfunder now, you'll see a few of the campaigns that are there that have pitches and plans. A pitch in its most essential form is you using your voice, your communication, your knowledge, your passion, who you are to your business, and really helping investors develop a sense of trust and have them see you as a credible person to grow this business long term. It's no small decision for an investor to take a look and to put their money into a company. What's at the heart of driving that is not a bunch of fancy words. What's at the heart of that is them finding you as a credible entrepreneur who's going to make the right decisions and who's going to be the person to foster the growth of the company at all stages when it's easy and when it's difficult. So your pitch and plan really talk to directly to that and give an investor or a contributor that sense of confidence about who you are, why you're the right person uniquely to be doing this, and then how you're actually going to execute on that. And so that's everything from a video where ideally they get to see who you are, they get to really see what your product is about and who it's for, and they develop that sense of trust and get to know that you have a plan. So that's one of the elements of success is your overall pitch and plan. That in a lot of ways speaks to the rational mind of an investor, where they're looking for what's the right answer, how do I find this credible, how is this going to be successful, and how am I going to get a return on this potentially. The second element is what we call social capital. And social capital at its simplest level is really just a sum of the value of all the relationships that you have personally and that your business has. So that can include your personal network. That can include all of the employees in your company. That can include all of the investors in your company that already exist prior to your crowdfunding raise. That can include any advisors or mentors that you might have that are part of the business more formally or informally. And as Crowdfunder grows, you can grow a follower and supporter base for yourself and for your company that also speaks well to this social capital. Now, social capital sounds like a great buzzword, and so I really want to bring it down to the level of how does this positively impact your fundraising success. So to put it in pretty clear terms, a lot of investors will like to tell you that the reason they invest is because they understand the fundamentals of the business and that the numbers made sense. Well, there's some truth to that. But what I know from experience in multiple fundraising scenarios, in watching investors make decisions to invest or not, oftentimes that's really driven by the social credibility and the social proof and momentum that exists around a founder and that founder's business and team. So social proof is at the heart of this decision making around the funding of a business. For example, if I get referred to an investor, um, and if I get referred to an investor by two people, that investor is much more receptive to me because I was referred from credible sources than they would ever be to me if I was just to approach them on the street or via email and not have a personal referral. That referral constitutes social proof, which makes me more credible and brings me into an area where the potential investor can actually think with a lot of the risk aside that he usually has to weed through and think through, and really can get to the heart of who are you, what are you doing, and have an easier time saying yes to what you're doing. So social capital is at the heart of this area of social proof, which is a very powerful social influencer. So if your campaign has a couple of followers and a couple of people that are supporting it and have funded it and not much traction and not a lot of people aligned next to it endorsing it, that doesn't look great to someone who doesn't know you and comes along. However, on the other hand, if your social capital has been built significantly and you have 50 people who have endorsed you as an entrepreneur on Crowdfunder, if your company has 700 followers and you have a great list of advisors and you have a great team all listed there, that speaks very loudly to the potential for success of your opportunity, because the crowd has started to catch on that this is a good thing. The crowd believes in you and your idea. And so social capital is something that you can start building today. Uh, our, our platform at Crowdfunder is a social network as much as it is a funding platform, where you need and want to start building relationships both as an individual founder of a business and that's through your user profile, and then also through your company profile that you create as well, which will then have its own set of social capital. So that's the second element of success for a business in crowdfunding. There's this new element of success, which in the old crowdfunding world of donation was really just a perk or reward. And that can still exist in contribution, and that can be powerful and a great reason for people to be contributing to a campaign and helping you get funding. But in the crowdfund investing world, there's an entirely new element, which is investment return. And so that is, it's very simply exactly what an investor will be getting back, either if you're doing an equity raise, how much equity will they be getting for how much money in your company? And what do they believe that might be in the future over a year, 3 years, 5 years? What is that going to be worth? How is it going to appreciate for them? That's a driver of a decision that's at the core of a crowdfund investment. On the other hand, if you're raising debt, there's a fixed model of return that they're looking for that your company will be able to service, given that it has adequate revenues. So that investment return is much more cash-based, and is an attractive incentive for people to say, this seems like a potentially low risk yet also exciting way for me to put my money to work and get a more predictable return if they're funding via debt. So that covers generally what I would say as both the kind of rational brain and the non-rational brain for investors on how to tell a great story, how to have elements like social proof and credibility, and then also how to make sure that you have the what's in it for them available to them, so that they have an easy time making the right decision. So what I want to do now is go ahead and show you a few of the things that are available to you now on the social network that is Crowdfunder. And so I'm going to go ahead and pull out of this presentation, and I'm going to go ahead and show you, not my email, I'm going to go ahead and show you Crowdfunder itself. Just one moment. I thought we're ready here. My apologies. There we are. Where did it go? Here we are. So here we were looking at the crowdfunder.com site, um, and I wanted to walk you through some of the opportunities that are available to you now. So I'm here and I've logged in, I've created a profile. I'm Chance, CEO of Crowdfunder. As you can see, I've built uh, a bit of a social network where I have 156 connections. These are real business people, a good portion of which already existed in my Facebook and Twitter and LinkedIn accounts. So I connected those accounts and I was able to see who in my existing network was already on Crowdfunder, and I connected them. So that's me already building social capital and some potential credibility as an entrepreneur on Crowdfunder. I've also put my location where I live here so that I can start to organize with the people in my local community. That could be especially important if I'm a small business and I would do better and maybe be wise to attract local funders and investors who might be interested in my product and being able to reach out and touch it. And then I also added some of my expertise and things that I'm focused on and what my company's focused on. Then I went ahead and connected my LinkedIn and then imported some of my work experience here that you can see. And that was very simple for me. Uh, and then I can continue to build and connect with my connections here and reach out to them at any time I want. So these people are good people in my professional network who, now that I'm connecting with on Crowdfunder, once I create my company profile, they'll be notified of that. Some of these people are great investors in my local area and beyond, and they'll be notified of that, and that will help create more momentum and visibility for my company as it grows forward. So I've also already created a basic profile for Crowdfunder. We don't happen to be fundraising today, but I've added my leadership team here to further build my social capital, which will then make it easy for my team to be an asset if and when I am ready to do a contribution or an investment fundraise. So those are some of the very basics of the Crowdfunder social network. What we also have live at this moment, if you go on Crowdfunder, you could search and see, are there any people in your local area that you might want to connect with? Are there people in your industry that you might want to connect with? So let's go ahead and search New York. And who are some of the entrepreneurs and investors who are in New York that I might know? I know a few of these people, and I'd be interested to connect with them. As you move towards reaching out and building your social capital, not only connecting your social network would be a core piece of that to identify the people you already know, but starting to build relationships with people who are just outside your social network, but who might be valuable and who are referrals and recommendations that you could get will be important. What we do have live now, as I mentioned, as we're waiting for crowdfund rulings for the first stage of investment crowdfunding, which will be crowdfunding with accrediteds, we do have our contribution model live on Crowdfunder today. And I mentioned one of the companies here that's shown was funded in 56 hours through our contribution model. Contribution model, again, is really focused on a set of rewards or perks. So this is a company, This Shirt Helps, that has a variety of causes that any purchase you make to some of their great stylish t-shirts can allow you to participate and fund some type of social good, whether that's feeding a starving child, whether that's an eco cause. Your money not only goes to purchasing you a great product, but also to doing good. So this is a great social enterprise here. They put together several different rewards packages and allowed people to purchase those. Several rewards are available to people here. And then they also put some specific goals that they had above their basic funding goal, which was 6,000 here. So at the core of this was both a great product and an existing social network they had built in part on Crowdfunder and also in the real world over some time as they have been growing their business. But then they really put together a great campaign and video here and a great set of offerings that made it attractive and interesting for people to want to buy and help fund this campaign. So this campaign keeps growing just after a little over a week and a half. We're excited for This Shirt Helps and the good that they're doing. So if you think your company is a fit, we would love to hear from you. It's as simple as going and creating your personal profile here on Crowdfunder, and then going ahead and creating a company, which can be fairly simple too, and then submitting that campaign for our approval. We don't approve every single campaign. We want to make sure that you're a credible entrepreneur. We want to make sure you have an offering that would be of interest to our thousands of crowdfund potential funders for you. But we really want to contribute to your support, whether you're a social enterprise or a small business owner. And we'd love to help you build your community, connect you to local people or people who would be interested in your service, and then help you have a funding success and contribution that could also help you, if you're interested, move on to a crowdfund investment round in the future. So I would encourage you to feel free to ask questions. I would encourage you to sign up on Crowdfunder if you want to. Please connect with me there. There's nothing I like more than to help great entrepreneurs. That's my mission and my cause here, in part. It's also on a broader scale. What we're focused on Crowdfunder is how do we create great jobs, and so access to capital is part of that. And so my job to indirectly do that is to make sure that I work with great entrepreneurs teams to help create great fundraisers that will allow that company to grow and then continue to hire. So with that, I'd like to open up this for a few questions to be asked. I think there might be some few people who have already typed in a few questions, and so I'd love to take a few of those and go ahead and answer them. And Jason and Woody, are you guys still here?
We are still here, and we are ready to answer any questions that are come our way.
Okay. So I'm going through some of the questions here. The first one is, what are the thoughts of crowdfunding making the Series A investor shortage worse? Currently, 2,000 companies have started this year via incubators and angels, but only 80 VCs are doing active Series A investments. So I think the question is crowdfunding going to make it harder to raise a Series A because there'll be less VC investors? Jason and Woody, do you guys have any thoughts on that?
I think that's a great question, and I think it's a question that we hear more often in areas like Silicon Valley and New York City, where there's plenty of capital available and companies' great ideas are getting funded. I think it's important to keep in mind that probably 90% of the ideas that come through crowdfund investing or the opportunity that is in the Jobs Act will be Main Street businesses. So businesses that aren't really in Silicon Valley or New York City, that don't need huge amounts of capital, that don't need VCs backing, but are good ideas that communities would rally around. So if we look at it from that perspective, I think what we're going to find are communities in Alexandria, Louisiana, or small town in Montana that are coming together to pool resources to help start local businesses. And there is a great need for that because that is where we felt the most impact from the collapse of the financial markets in 2008. I do believe when it does come to those VC potential companies or the angel-backed companies, that this will create more deal flow for them, because what we're already seeing by having talks with angels and VCs is when this gets up and running, they are going to be asking portfolio companies, potential portfolio companies, to go out and crowdfund their initial round because it will de-risk the investment for them, because it does exactly what they're looking for, which is you to go out, see that there's proof, validation for your business model, for the concept itself, and more importantly, see if there's customers that will be consuming that product or service. So I think when this gets up and running and we see it going, that we're going to see more dollars flowing into it and making better deal flow for angels and VCs.
Great, thanks. Another question we got was, how do you see angel investor networks being involved in crowdfunding? So I've actually pulled up an example of an angel investor network that is already on Crowdfunder. They are looking to invest $100 million into social enterprises. They are made up of a global network of impact investors. Um, their name is Tonic. They're led by a great founder that you can see here, Morgan Simon. If you go on Crowdfunder right now, you could see all these people and connect with them. Tonic is looking for great social enterprises, again, social for-profit companies that also have impact goals. The reason they care about that is they have understood that in the past there was a world of nonprofits and there was a world of for-profit companies, and that only nonprofits were the people interested in doing good. And in this day and age, that's not the case. There's a lot of companies that are interested in doing good, and rather than be a nonprofit to do good that has to continue to fundraise and isn't necessarily that sustainable, what Tonic understands as a group is that if you can find companies that create great outcomes and social good alongside a sustainable, profitable model, then it's very likely that that model can scale to a much larger level to create much larger impact. So Tonic is not only already on Crowdfunder to look at social enterprises, connect in this network and community, but they will also be creating what's called their own channel on Crowdfunder. So they will be bringing their network of investors to Crowdfunder to live in this Tonic kind of walled garden community where their investors and the entrepreneurs that they like, that they want to get to know more about, and the companies that they're interested in looking at to fund will be invited in and allowed to engage in this smaller walled garden community of Tonic for social impact. So what we're focused on is not only building a tool for you as an entrepreneur of a small business or a social enterprise to create a great social network and then leverage that social network for fundraising and contribution or investment, but to also work on the other side of the table and to focus on bringing great groups of investors who are doing great thought leadership, creating great companies, and give them a place to house some of the connections and engagement that they want to do to source great investment offerings. And so we're excited to be working with Tonic and a good handful of other investment groups. That network of people is growing rapidly, so expect to see a lot more in the near future. Other questions? Kathy Odell asked, how will access to business plans be managed? Is Crowdfunder involved in assuring investors are accredited? So those are two kind of separate questions. Access to business plans will exist in investment behind a more private wall so that you don't have to put it out to the entire public internet for them to see everything that you're up to and to get their hands on what might be more sensitive and proprietary information. We will have in the accredited and investment offering that is coming very soon, the ability for investors to request access to see those private documents. So they will exist behind a private access only area for you to create as an entrepreneur so that you don't have to share that with anyone that you don't want. And so Tonic, for example, could apply to see your business plan and any offering that you might have. And so could someone on their leadership team, Morgan Simon, as heading up and maybe leading that investment. And you would then be able to see that request and make sure this was someone that you felt was credible and you felt more comfortable either automatically adding in to allow access to your business plan and your more sensitive financial documents, or having a conversation and connecting with Morgan and asking her a few questions first to make sure that you feel safe. Are we going to be assuring investors are accredited? For accredited investing, absolutely. So I'll answer another question alongside that, which was, is Crowdfunder a broker-dealer? We are working and are a broker-dealer for our accredited investors in partnership with Gate Impact. So that allows us to help drive accredited investor-based offerings in a private environment that has all of the requirements that Jason and Woody talked about for accredited investor offerings, and allows you to feel comfortable that you're in a safe space, adding your fundraise, that your proprietary information is protected, and that you're safe in an environment that is all accredited investors and that they can take a look at your deal and decide if they're interested in funding it or not. Jason and Woody, do you have anything to add around those pieces, whether it's angel investor networks, whether it's broker dealers, or accredited investing?
Well, this is Woody. I think what I would add is that it's probably going to be of self-certification when it comes to determining what you can and cannot do in terms of investing. So people are probably wondering, well, how do we verify if an investor is accredited or not? If you're familiar with Reg D offerings and what goes on in the current marketplace, the way in which you verify someone's accredited is you give them a form and they self-certify that they make over $200,000 a year or have a net worth of like that. So those type of forms will probably be assimilated into the crowdfunding platforms to verify it. There's also technologies that are being developed that will probably be working in collaboration with the U.S. Treasury Department and IRS to actually allow people to ping into the IRS databases to verify their eligibility without actually having to disclose personal identifying information. So I think we're going to be seeing a lot of innovation taking place in the marketplace there that will allow us in the crowdfunding marketplace to accomplish our goals, but allow the broader markets to do that as well.
Great, thank you. We have another question. Kumar asks, you mentioned all or nothing qualification for fundraising. What does that apply to exactly? I can take this one, and I'll say that the all or nothing qualification for fundraising applies directly to any investment fundraise that is done in crowdfunding. Let me give you the reason why. That's the sensible one, and then I'll also give you the one that is kind of the clear securities law reason. If you're raising money for a business, oftentimes if you don't receive the full amount of funding, it can be true that you don't have adequate funds to fully capitalize your business to execute your plan. And so there's a major difference between an adequately capitalized business and an undercapitalized business. An undercapitalized business can't even begin potentially creating the products that will then create customers and revenues, while an adequately capitalized company can do that. And so what you'll see in crowdfunding is, rather than people trying to raise everything that they want, you'll see behavior shift a little bit to a more iterative set of fundraising to say, if I can only take in funding, either equity or debt, if I raise 100% of what I set out to do, then I want to be clear about what my 100% is going to be. What do I actually need? What are my use of funds? What's going to be the key drivers of success in moving this business forward? And so you'll see people really focus that on the core set of things that are really going to be the drivers of the business. And you'll often see people who started thinking, hey, I wanted to raise $750,000, get to a point where they say, you know what, I really only need $300,000 for the next 12 months to scale. And I've planned a credible use of these funds to get me to a revenue positive or a very significant set of momentum for my company from there.
And Chance, if I could add to that, because I think it's really important, and Jason and I do often hear from entrepreneurs, what is the right amount of capital I should be seeking? And this is a shameless plug, but I'm going to go for it because we have a chapter dedicated to it. If you, in both Kindle and Nook version, Crowdfund Investing for Dummies, the In a Day series is available. And we spend a chapter devoted to helping people understand what the right amount of capital is and how they calculate that before they go out and seek it. Because Chance hit on a really important point, which is you want to have thought this through, because you're going to have to defend this to the crowd. You're going to have to hit 100% of your funding target, and you want to make sure that you have the right amount to hit your goals. So Crowdfund Investing for Dummies.
Great. Well, it's a worthwhile plug, so I'm more than comfortable with you guys making it. Thank you. Not that I'm not being shamelessly promotional here either. So we have a few other questions, but we've taken up our hour. I think we're on the dot. What we're going to do is we're going to try our best to answer all of your other questions by email. We want to make sure that this has been a great use of your time. We'd like to have Crowdfunder be a resource for you if you're a business owner and you're looking to raise funds either in contribution or investment. Again, Jason and Woody, I really appreciate you guys taking the time, and I want to thank you again publicly, as I try and do each time I'm public with you, to say thanks for your great work and being some of the core initial drivers of this entire crowdfunded investing movement, and thank you.
Well, thank you very much. It was great to be with you, and we really appreciate you putting this opportunity together, and we look forward to more of these in the future.
Great. Thanks so much.
Thanks.
Bye.
Bye all.